Hi, this is James Shug with Westpac London's end of day report for Tuesday, October the 9th. Look, sentiment turned progressively more negative on European markets today. The session started with the news in late Asian time that the IMF was downgrading their growth forecasts for the global economy in 2012 and 2013. They cited very high risks to the downside, including a 1 in 6 prospect that the global growth outcome over the next year or two could slip below 2%. Their current forecast, their new forecast for this year is 3.3%, down from about 3.5% previously. I've got to say that compares to Westpac's 2.8% for this year. So it's not so much that the IMF forecasts were particularly gloomy. It was just the revision to the downside and the citation of those risks that caught the market's attention. A lot of stories about China's slowdown, about mining companies laying off workers in Australia and elsewhere because of weaker demand from China, and also some just generally negative press about the global outlook. All of which combined to see risk appetite diminish throughout the London day. On the data front, we had a few bits and pieces, including industrial production figures for the UK, which were very soft in August, particularly the factory component, and that corresponded with quite a sharp 4% fall in exports from the UK in August. The US data today was on small business optimism, which slipped in September slightly, and that survey included a sharp fall in the intention to hire index to a 3-month low. On the other hand, the IBD TIPP Economic Optimism Index for October, which is the first read on consumer sentiment for the month, it rose from 52 to 54, which is its highest since late 2006. And that's despite relatively high gasoline prices in the last few weeks as well. So that was a decent result. But nothing resolved by European finance ministers. Merkel's in Greece at the moment, praising Greece for its budget deficit reduction efforts, but saying more needs to be done. No news yet whether Greece is going to get the next bailout tranche. I suspect they're going to, though. They need it by November if they're not going to default. That's about it, really. We've got Alcoa kicking off the latest quarterly earnings season. There's been a lot of negative press about that. Some analysts suggesting that it could be the first quarter for some years that we actually see a majority of firms actually missing expectations. So that's the main reason for risk off today. In terms of markets, just heading into the European close, we've got the London market down 0.7%, the French market down 0.7% as well, and the Germans are off 0.8% today. The Spanish market down 1.8%, but the Italians managed to lose just 1/3% today. The Dow at the moment is down around 2/3%. That's at 13,495. The Nasdaq's been hit even harder. I mean, Intel's been downgraded by one analyst, Apple by another. So that's seen tech stocks marked down more sharply. In terms of commodity markets today, some negatives, including gold down 2/3% at $1,764 an ounce, and copper prices are off 1/4% today, but oil was up 2%. It's at $91.13 a barrel. The Aussie dollar, it's at just under 1.02 at the moment. It was sailing around 1.025 for, well, it peaked around 1.025 earlier in the London session, but there's been a bit of a late sell-off in line with the latest dip down in markets and pick up in risk aversion that we've seen. In the Aussie market tomorrow, we've got Westpac's, or today, it's Wednesday, we've got Westpac's Consumer Sentiment Index for October coming out. So that's it really. Just a typical global growth concern, risk off sort of attitude in markets today. Okay, I'll be back with more tomorrow.